Thank you very much, Rachel. And thanks to those of you who are joining us today for our webinar. It's lovely to see you all. My name's Joe. I'm General Manager of FinTech North. And as people join, as I tend to do at the start of our events, I'll just give a bit of a introduction to FinTech North as an organization, who we are, what we do, the role that we play within the ecosystem for the benefit of those who haven't joined a FinTech North event before. And apologies in advance for those who've heard me say this many times, because I know a lot of you join all of our events. But yeah, hopefully it's something you'll forgive me just to kind of run through things. So first of all, just want to say a huge thank you to our PR partners, Galibier, for supporting us with the event today. Yeah, trust in FinTech. We feel like this is a really important topic, obviously with FinTech being a frontier technology. Trust is so important in this highly regulated and fast-moving space. And yeah, we know the team at Galibier are really hot on this as a topic and can't wait to get stuck into the discussion today. So huge thanks to Oliver and the team there for supporting us with this event. As I said, my name is Joe. I'm General Manager of FinTech North, and FinTech North as an organisation exists to bring together the FinTech community in the north of England. We work wherever we can to develop the sector in the north. We try and align all of that amazing innovation that's happening in places like Leeds, Manchester, Liverpool, Newcastle, make sure that that is aligned with what's going on within the UK's national fintech sector, and indeed, what's going on an international stage as well. So trying to be a bit of a conduit between the regional and the national and international, and make sure that what's happening in the north is part of a wider UK landscape, basically. On a sort of day-to-day level, we achieve a lot of those lofty ambitions by bringing people together for events, conferences, webinars like this one, seminars, trade missions, you name it. We feel like face-to-face events are the best way of, getting together, but also, by sharing news stories with our community, video content, and obviously virtual content such as this one. I think the main thing to note really here is that, the FinTech North community, which is over 10,000 people right across the north of England, they're interested in FinTech, they work in FinTech, and it's on us to bring that community together as well as promoting the north as a centre of excellence in FinTech. We're entirely self-funded as an organisation. We rely on the support of like-minded partners, sponsors to come on board, support a webinar or an event such as this one, or take an annual partnership and help fund our activity. And huge thank you to all of the organisations, the amazing organisations you can see on screen right now. We're really lucky to have such a great group of partners, and we work with organisations at all sort of stages of, and at all sizes across the ecosystem, from sort of regional fintech startups and scale-ups right through to instantly recognizable financial services brands. So huge thanks to all of our partner organizations. So this is a special year for FinTech North, as you can see from our graphic there in the bottom right hand corner, which is the FinTech North logo wearing a birthday hat. We're celebrating our 10th anniversary this year. We started back in 2016. Actually launched at the very first Leeds Digital Festival. The first ever FinTech North event was really, a way of bringing together the FinTech community in our own back garden. The event happened again in 2017, and in 2018 we expanded over to Manchester for the first time with a conference. In 2019 we expanded up to the northeast with a conference in Newcastle and hosted a conference in Liverpool, and really became, I think, a pan-northern organisation at that point. Fast forwarding through sort of the pandemic years during sort of 2020, 2021, we started work on our partnership packages, and that helped us to grow the business so much so that we could employ more people, bringing on board Ryan Walsh, who's now our marketing and community manager, in 2021. And then a couple of years later, we expanded the team again and brought on board Rachel as our events manager. And Rachel joined the team in 2023. And yeah, we're continuing to strive for growth at FinTech North as an organisation and continuing to develop our support for the ecosystem. We've seen fantastic growth across that ecosystem in the years that we've been active, thanks to our parent company at Whitecap Consulting, who produced some fantastic thought leadership on different ecosystems across the north of England. We've seen that the sector roughly doubles in size every 3 years or so, which has been amazing. And as an organisation, we've also kind of seen a similar growth in our community. Interest in fintech remains strong. Still remains one of the sort of UK's, most significant growth sectors, and one of the things that we are still genuinely global leaders in. So, still very much on the radar of government. Fintech is both an enabler of other sectors and also a high growth sector in itself. And we continue to see that interest as well. Here are some cool quotes from our community, from the community survey that we run every year. We share this with the community so they can tell us what their thoughts are on our activity, so we can learn what things they're interested in, and obviously, we try and gather a bit of intel of the kind of value that we provide to those within the ecosystem. And as you can see, most people have, at the very least, established good connections through FinTech North, or indeed have actually won work, on the back of work that we've done with them as partners. So yeah, still remains a really valuable community platform that we provide. So that's FinTech North. Just to give you a quick overview of what we see in terms of the activity in the North as a whole, the Northern FinTech landscape. There's around about 400 FinTech firms in the north of England. The sector generates about 5 billion GVA every year for the UK economy. And we see different sort of subsector specialisms as well emerging across the north. This rather busy graphic here is a visualization of all the FinTechs based in the north of England. You can see payments in the top left-hand corner there really dominates. It's one of the largest subsectors and probably accounts for about 50% of the northern ecosystem, and that mirrors roughly what you'd see across the UK as a whole. Lending follows that, and then we've got various different subsectors: wealth tech, banking, accountancy software, insurtech, regtech, and data and analytics also comes in there as well. And the story that we see across the north is also nuanced and different. Different cities have different specialisms. For example, Liverpool, really strong on insurtech and wealth tech. Obviously, a port city, it's kind of got proud maritime heritage, and actually some of the sort of fintech specialisms we see there mirror that. Greater Manchester, long been a centre of retail and textiles trade, and accordingly, today e-commerce does really well in the city, and the payments ecosystem surrounding that is also really, really special. In Leeds, Leeds is home to three of the top 5 building societies. So lending, regtech, banking come through really strongly there. All the major credit reference agencies have a base in Leeds. FCA and the Bank of England have opened offices there recently as well. So we see that kind of regulatory specialism come through in terms of the propositions we see there. And up in the northeast of England, there's another sort of payments hotspot around Newcastle. Some really well-scaled fintechs based up in the northeast as well, such as Atom Bank and Sage, who I'm sure you'll all be very familiar with. This slide just highlights some of the growth that we've seen, in the years that Whitecap Consulting have been actively measuring and analysing the size of the ecosystem there. Some really, really dramatic growth, and yeah, we love to see this. This is what we're all trying to support, by doing the work that we do. Some of these graphics I'm putting on screen now, they're available publicly on Whitecap Consulting's website. This is the North of England FinTech report, which was published in July last year. This is all publicly available. There's a fantastic list of all the FinTechs based in the North of England. I think interestingly, it breaks all of the regions down, as you can see on this slide. So yeah, well worth looking at if you're interested in, what FinTechs are out there, what subsectors they're in. It's a great resource for your business development. 100% recommend that. And just to kind of bring this to a bit of a close, just want to give a shout out to some instantly recognizable brands that have kind of recently expanded into the north or have been, homegrown success stories. Really welcome these organizations as sort of our partners and some of them as kind of part of our community as well. So, just want to highlight that you can stay in contact with FinTech North. Having signed up to this webinar, we'll be sure to get you added to the mailing list. Obviously, we've got other channels to stay abreast of updates with as well. We've got an Instagram. We've got obviously our LinkedIn account, as well as our usual sort of marketing channels. Final thing to highlight would be our Leeds conference, which is the big one. It's our 10th anniversary. It's our 10th birthday. It's going to be hosted on the 24th of June at AQL's HQ at Salem Chapel. Awesome venue. Can't wait to make that one happen. Please go to our website and get your tickets now. And that brings me to the close. So at that point, if I could ask Oliver to join me on the virtual stage, and I'll hand over to you, sir. It's great to see you.
Hello, Joe. Thanks very much for that intro. Lovely to see you all and excited to see everyone participating today. My name's Oliver Cheshire. I'm the founder of Galibier, which is, as Joe says, the partner PR firm that has been with FinTech North since the beginning. I was at that inaugural conference at the Salem Chapel 10 years ago. I was a child back then, of course. Anyway, a couple of words about today. The reason I'm so excited to convene this session on this topic is because, as you can imagine, where risk and reputation are at stake, where credibility is at stake, and of course the stakes are high, this is where a PR firm would really come alive. So a word on Galibier. We're a PR business that I set up in 2013, and we specialize in the sort of more technical end of the market. We tend to work with science and tech and academia type clients. Obviously, within fintech and within financial services, it's fair to say that if you're reading about the goings on in fintech in the press, it's likely that the shadowy hand of one of my team is behind it. We're very proud of our partnership with FinTech North and with a lot of players in this space. And this topic, of course, today is very relevant because for me in this industry, trust is probably the biggest barrier to doing business. Is there a trust crisis, or is that just a clickbaity title? Well, thankfully, you're not just here to hear my opinions on this. I am, of course, prepared to talk a little bit about what to do and how to do it, but actually our panelists that I'm very proud to say have joined us are absolute legends in this game. They are the ones that are out there actually living it. So I'll ask them in alphabetical order to reveal themselves, and they can tell you a bit about who they are, what they do, and perhaps align each on the perspective from which they're approaching the topic of trust. So if we're going to go alphabetically, that means you're first, Alex. If you would please reveal yourself. Welcome.
Thank you very much, Oliver. Yes, hello everyone, good morning. My name is Alex Clough. I am a senior product owner for Lenvy. I've been at the company for about 6 years now. My background is very hands-on, a lot of time spent with operation and frontline teams. Recently I've been leading a project which involved moving off legacy systems where customer services were still live, but we had to shape how that worked and build the trust within that fintech world. Lenvy is a fintech that builds platforms for lending and mortgages, and we're UK's #1 lending platform. We build platforms for many organisations where systems need modernising without disrupting really their day-to-day jobs. That's me.
Thanks, Alex. Angela, you would be next. Please reveal yourself, and thanks for joining us. Oh, Alex, you can stay on screen, by the way. You're on stage now. Thank you.
Hello. Hi, lovely to be here. Thanks very much for inviting me. I'm Angela Hesketh. I'm Head of Government and Public Affairs at PEXA, which is a digital payment infrastructure which moves money in property transactions and also integrates directly with Land Registry to ensure that we're securely moving money and title within that environment. So trust is absolutely core to everything that we do. My background is I am a property lawyer, and I was a property lawyer in private practice for over 30 years. So I bridged that between the sort of very practical, hands-on legal experience in a property transaction together with that technology background and what we're doing in relation to PEXA. So I've always been surrounded by that trust conundrum and really what's so essential around that. And this really feeds into a lot of the work that I do day to day, which now goes much wider into the ecosystem in property around property data trust frameworks and smart data guidebooks and all of those things, which again, trust is at the core of that. So really looking forward to today.
Thanks, Angela. And finally, Ez, if you would please reveal yourself. There he is.
Hi everyone. Never quite done this reveal by reveal thing. It's quite fun. Hi everyone. Ez Britton. I'm currently co-founder of Collectively Better. We're an organisation that works with startups and scale-ups and corporates to help them grow and scale up their businesses or launch new initiatives, whatever it might be that they need support with. In a former life, I've been a fintech founder in the lending space. I've been a VC investing in diverse founders. I ran CFIT, the Centre for Finance, Innovation and Technology, bringing together the UK financial services space to help drive forwards innovation, working closely with governments, regulators and industry. I also sit on the board of Crisis, the homelessness charity, as a trustee, and I'm on the UK Smart Data Council with DBT. So throughout my career, I've worked with clients, I've worked with investors, with founders, with governments, with the regulator, with industry in the charitable space, and there are many, many other things as well. So trust has absolutely been a crucial element to how I've had to do business and how I represent myself in all the different spheres in which I operate. So this is a really, really good conversation to have today, because it's wonderful to see it go well, but it's also quite sad to see it go badly, right? And I think it's a useful conversation to have.
Thanks, Ez, and thanks everyone. Might be worth pointing out at this point, we did have one final panelist, Megan, who very sadly can't be with us today, as advertised. Meg sends her apologies. Some of the talking points that she had prepared for today, I actually think that the remaining four of us can take on her behalf, particularly around policy and around stakeholders in the legislative and regulatory space, which I know, the panelists here today have some experience of. So this will nevertheless be a very rich discussion. So without further ado, I'd like to go in two-footed and really start with some scene setting. And Ez, I know that you have been around since the very dawn of this thing that we now call FinTech.
The dawn of time, as it were.
Absolutely.
I didn't know I was that old, but
well, none of us likes to admit how old. I mean, I was hesitant to say that I was at Salem Chapel 10 years ago, but I'd have probably been in my 40s even then. Anyway, it's very interesting. You were saying some stuff to me offline last week about the then and now and what's changed. And actually, in probably no more than a decade, the language has changed, the discourse has changed. You've talked about the language back then around being disruptors. We don't use the word disruptor anymore. It's cheesy. You've talked about being the grown-ups in the room. I'd love to hear your perspective on the then versus now to give us a bit of context.
Yeah, absolutely. So when we founded my first startup, which was an online lender, Neighbour, that was the same time as Starling Bank, Monzo, Zopa, RateSetter. All of these organizations were springing up at the same time. Well, actually, Zopa was a few years earlier. And it was very much about disrupting the big banks. It was all about, everyone's going to take market share. The big banks are terrible. They don't operate well. They don't know how to service customers. Their apps are terrible. Their releases are slow. Alex, I'm sure, will talk a little bit about release windows and the rest. I was a software engineer for 10 years ago, for 10 years prior to that. Very familiar with the idea of the standard release window being like once every 6 months, right? Suddenly shifting to every couple of weeks. Now I'm sure Alex will talk about daily, monthly, hourly releases, right? And kind of thing that you can see today. And just shifting to a 2-week window was a disruptive activity, right? Let alone every day back then. And it was all about the Facebook mantra of move fast and break things, right? And that's where everyone was. Regulators didn't like that very much, as we then discovered, particularly in what was a real bleeding edge industry, which was peer-to-peer lending at that space, when the regulator didn't know how to deal with it, didn't know how to get their hands around it. The model wasn't worked out just yet. Businesses were going to the wall because, the model didn't really work for a lot of them. And it was just a bit of a mess and chaos. And some businesses made their way through that and have become very, very successful. A lot of the others just didn't, right? But it was seen as okay back then. That's what we were doing. But you could see the big banks were very much, well, we're not going anywhere near this. This is chaos, and we value our customers and what we're trying to do and achieve. And it's interesting to see how that Wild West of startup activity back then has now matured. I was at IFGS on a panel just a few weeks ago, dressed very much as I am now, and everyone else is in suits and shirts and ties. And yet when we started, it was all about, no, T-shirts, right? T-shirts and jeans. And then you still got a few Nick Stronsky, still very much long-sleeved crew neck top. But for the most part, what you've seen is a real maturation of the space. And the reason for that has been those highly aggressive, fast-moving disruptors have recognized that actually in the UK, no, we need to either work with the incumbents, partner with the incumbents, or we are becoming the incumbents, right? And you've seen a complete shift in approach in that whole sector. I think also there was a realization that working in a regulated space is not the same as building a social media platform, right? The move fast, break things mantra does not work when the regulator steps in and goes, wait a second, because of this, borrowers are now in a terrible situation. You haven't treated customers fairly. You've not adhered to your fiduciary duties. That starts to introduce some very real problems for those startups. And I always used to say, move fast, break things, fix faster. That's the only way you're going to operate. But we're quickly moving to a world where break things is not even in your lexicon anymore. It is how are we going to improve things as quickly as we can, right? And if you don't have that, customers now have so much choice because of this. They can move quite quickly. And so they're not going to go to those businesses that they don't trust. They're not going to go to those businesses who leave them out of pocket. They're not going to go to those companies who they can't on board with, who they can't actually access the services. So you're just seeing a complete shift in the approach to this. And I think that's a good thing. But I think one of the things we shouldn't lose sight of is still that innovative energy, drive, momentum. That's still extremely important. And it's trying to maintain that balance between trust, predictability, and stability, but also moving quickly, innovatively, and creating better outcomes. Because ultimately, that's what we want. I think where things start to get a bit lost is where founders start to focus more on how do we make money, as opposed to how do we create better products for our customers. When I say how do we make money, for a lot of founders, it's how do I raise more money, right? And it's trying to balance those two personalities.
Thanks, Ez. This is really useful context in terms of the macro journey. It's really interesting to hear about sort of what it was like back then versus now. I'd like to zoom in a little bit, still in keeping with the theme of the journey, and look more at sort of today's customer journey. And perhaps this is one for you to kick us off with, Angela, with regard to in the customer journey now, starting to think about where you win and lose trust. At what points in the journey do you think trust is won and lost?
Let me relate it to something that probably most people will be able to relate to in some way, because it's my world, and that's the property journey and buying a home, which it has become one of the most traumatic experiences for most people, with one in three transactions falling through. So there's some real issues in there. But what causes that problem, and this is what we see in every other industry, is when they don't know what's happening. They don't know what's happening. They don't know why. They don't know what's next. So they start to sort of, and this feeds into the delays that happen, repeated requests for information. So you're losing that sort of trust in every step of the way, and it leads to a position. I mean, at the moment we have a very, very delicate property system because of this. The transaction length has gone from 4 to 6 to 8 weeks to 5 to 6 months. People are within this really traumatic experience for a long time, and they just don't know where they're going, and they don't know what they can do about it, how they can control it, and they have no trust. And this just adds to the stress that we see. And I think, for me, trust is built where the journey is predictable, where whatever you're doing, it's about that predictability, it's about transparency, and it's about consistent delivery, because that's what you're building the layers, aren't you, to say, look, we've done this when we said we would do it, and then we're doing the next thing when we said we'd do it, and so it goes. And you are being judged on the back of that. But that's what we all do, because at the end of the day, the customers won't necessarily remember the smooth parts, but they will definitely remember the uncertainty aspects, and that's the thing that's going to impact on that trust from that point of view, really. And I think that translates to everything. It's very, very evident in a property journey, but it's evident in anything that we do. If it's not predictable, we don't know what's going to happen, we want to get out of it as quickly as possible, and we start to feel really uncomfortable. and go somewhere else as quickly as we can to try and find the answer, really.
Thanks, Angela. And Alex, I think I could see there that Angela was really speaking your language. She was using some of the words that I've heard you use many times before about transparency, about delivery, about doing what you said you'd do. I'm sure you have some technical perspectives to add to that.
Yeah, well, Angela got it bang on, really. We found the same thing with mortgages, that the journeys, and when people don't understand what's going on, what comes next, and really how long a journey can take. Something that we've really tried to look into is automating things. So really simple automation for things like when they send a document in, is that document correct? Have we got AI that can actually look whether the relevant information is within that document? If it's not in that document, let's tell them straight away what's missing, come back to us. And actually what we've done with things like that is, when the document comes back in, if it is correct, it moves on to the next stage, right? So we call it like a breadcrumb journey. Goes on to the next stage. When it's on there, it sends an email to the customer saying, brilliant, thanks for that. This is the next stage which we've got. And actually, these are the kind of things that are going to happen. And actually, this is how you can prepare for them as well. So what we find with customers is they wait till the time it happens. They go, I need all this information. I need this documentation. I haven't got it. Well, if we're preparing the customer for that before, they know what's coming, and that builds trust. They know that we know what we're doing, and we're helping you make sure you get it right as well, which is just a smoother journey for the agents here and for the customer as well. So yeah.
Thanks very much. I mean, this is a really useful scene setting. And at this point, I should add that questions are coming in. We encourage all participants and all audience to send us your questions. And the couple that I've already seen are absolute zingers as well, which delights me. I think, please do put us on the spot. Inevitably, people want to know what happens when it kicks off, what happens when it hits the fan, how are fires breaking out, what happens when something catastrophic goes down that threatens to permanently erode trust. Definitely, I think we're going to devote quite a lot of time today to that. Before we get to the real catastrophic stuff, I just wanted to make the point that, questions large or small, chuck them into the chat. And even if we don't have time in the next half hour to tackle them as a panel, I think it's very much in the spirit of the community of FinTech North that we are all happy for you to contact us on LinkedIn afterwards and keep the conversation going. So in terms of some of the questions that I've got here now for the panel, like I say, it's all on the theme of when it kicks off, when it hits the fan, as I might have expected. That's what people love to hear. Whenever I tell any stranger that I work in a PR agency, that's what they want to know about. What do you do? How do you handle a crisis? Tell us the juice. I also know, by the way, that there are some current real life, real world examples of where things have kicked off, where the FCA and the PRA have intervened. And as I believe you're prepared to share some insights, some real world insights on that. So if you don't mind, I will shut up and let's see what you can get away with saying on record.
I've got a few interesting examples of that, actually. So, I mean, there's one of the most public ones is Bank of London at the moment, right? I mean, if I talk about the Bank of London, let me be clear, their team is fantastic. They've got some brilliant people there. I know them. I know some of the people quite well. But there have been mistakes made in the past. And, if you look at how, from a financial transparency perspective, not filing accounts, not being honest with investors, not being transparent with the regulator, having a founder who was busy jet setting around the world whilst all of this was happening, right? There was a lot of issues that went wrong. And in the end, what you then saw was an outcome whereby basically senior exec team were replaced very abruptly, no transition plan, CEO steps down, a number of the board members stepped down, and they've had to replace most of the senior exec team. They've had to have an emergency cash injection, and they've had to re-engage with the regulator in order to manage that situation, right? And even then, they've been fined, and they've now been told they can't take on board any new clients. That is possibly the worst outcome you can possibly have for any regulated business, especially one that deals with businesses. When you're dealing with customers, you can kind of get away. There will always be those consumers that don't really know. or are comfortable taking that risk, but business risk is really bad, right? That's a serious problem. Now, as I said, I know the senior exec team, so they're really working on pulling this through, and I'm sure they'll make it. You know, they'll do the right things. But that's an extraordinary example of how poor founder CEO behavior can lead to just horrendous outcomes for a business, right? And for their customers. Their customers have got money with them. Their customers rely on them for services. We look at another example, which was my own business, Neighbour. You know, when we were operating, we did a data migration. We shifted to a whole new data center, and unfortunately, a port was left open, right? And we ended up getting hacked, part of a massive global incident, actually. So we weren't the only ones, NHS, everybody else got hit. We got hit as well. But that was a terrifying situation as a new startup, scale up, dealing with really sensitive information, getting hacked, and like, how on earth do we deal with this? And so, you know, the first thing we did, we were very open with our investors. We brought in investigators to have a look at the situation. We spoke to our insurance company. We spoke to the regulator about what had happened and the actions that we were taking. We put in place a mitigating plan. We communicated with our customers. We went overboard, like fully all out on trying to do everything we could to resolve this. And we were working very closely with other organizations such as Goldman Sachs, Police Mutual, and the rest who are our backers. So we had to get it right. And I like to believe that we did, but it was a very, very painful process to go through. And one that puts a huge amount of stress on everyone involved, but particularly the founders, the management team, who are taking personal risk in trying to manage the situation. And it's so tempting when those situations are happening to just go, we're not going to talk about this, we're just going to let it slide. And we did have investors and advisors saying, just let it slide, don't let anyone know, just get on with it. But we said, no, we're not going to do that. We're going to be transparent. It's important to us we maintain the trust of those users. And we did. And that was, you know, we pulled through that, and the business continued to grow after that. So, you know, it can be done. You know, you ask people, say, well, what do you do when the fire breaks out? That's what you do. You know, you have a plan, you execute, you're transparent, you get on with things, you drive forwards. You know, and there are other examples where trusts can be lost so easily. So one of the things I'm involved with, I'm chairing the City of London's Digital Verification Orchestration Task Force. About a year ago, that seemed like a really positive thing. People were quite open to digital identity. No one really wanted it, but people were comfortable with the terms and the phrase. Industry spent a long time building up to this. The Data Act had been put in place, so that this primary legislation was now there. Secondary was going to be coming, statutory instruments were going to be there. And then all of a sudden, government announces they're going to drive forwards with digital identity. It's going to be essential. You're going to need it for right to work checks, etc., etc. And the whole world exploded, right? And everyone just went absolutely berserk. All of a sudden, digital identity was the absolute enemy of everything. I remember being at a concert where the warm-up band said, you know, blah, 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 blah for cause A. And everyone was like, yeah, great. And then turned around and said a no to digital ID. My partner looked at me and I said, look, it's not my fault. that's not on me. Right. And fortunately, they've had to roll that back, but it's extraordinary how poor communication can just completely trash reputations, right? And they've had to roll that back. And I think we're now getting back to a place where actually everyone's feeling a bit more comfortable with what they're suggesting and what we're talking about and what we're doing, etc., etc., etc. But it is so easy to just destroy your reputation through poor communication and lack of a plan. And how do you deal with things when things go wrong? I'll pause there because I think we've covered quite a few points.
Well, you've actually introduced some killer points that I think we're going to keep coming back to about what to do when things go wrong. This seems to be kind of a universal theme from a lot of the questions that are coming in. So we'll definitely come back to some of that. One question that sort of we haven't got to yet, which I'm particularly interested in, is more of a practical question, which I think, Alex, you will probably have some real insights on, which is about measurement. we've got to be practical here about how do you actually measure trust so that you can then demonstrate to clients and win their trust so that together we can then go on and win customer trust. Thinking about all the stakeholders, you've got to start from some kind of metrics, right?
Yeah, I don't think trust can be a single metric you can track on the dashboard, right? For me, trust shows up in whenever journeys actually work end to end for the people using the system. So, before we can build anything, gaining the metrics and understanding what the current problems are and what they are. One, for us, and secondly, for once we get the metrics afterwards, how does that look? So early on, you look at signals, for control, clarity, breaking down things like how many cases get stuck, how many agents can't progress something, and how many times we're asking for the same information again and again. If those numbers are high, it usually means trust is already under pressure, really. Where this becomes really visible is operational outcomes. So, for example, simplifying service journeys, giving agents clearer visibility and control. Things we've done in the past, like reducing the average handling time to around 6 minutes to 2, or telephony wait times come down several minutes. They're not just efficiency improvements, they're trust indicators. Fewer repeat contacts and shorter calls usually mean people are getting answers first time. So one of the biggest trust signals for me is the agent confidence. If the agent understands what the system is doing and why, they can explain clearly to the customer. When they don't, trust breaks down quickly, even if it's technically correct, really. But from a client perspective, trust is earned through consistency. So fewer escalations, fewer reworks, predictable delivery, reducing noise. So we don't measure trust directly. We see it reflected in smoother journeys, and empowering the agents. And when those things improve, the client trust follows. But doing all that work, you then have the metrics once you've finished. As was talking earlier about releases, small releases and getting things changing quickly and making sure that agents understand what those changes are and how they can relay that then to customers as well. When you start seeing those metrics change and you're reporting those to the agents and to the business, they can see how well things are performing and actually want more releases, want things to change, because the trust comes when the agents know what they're doing. Customers can tell that too, and that builds trust all around.
Thanks, Alex. I've got so many questions now on various channels that I think rather than trying to reverse engineer some kind of flow, I'm just going to jump around. We've got size and scale questions. We've got founder questions. We've got double-edged sword regulatory questions. So I'm just going to jump in without trying to, cleverly engineer any preamble. The first one I think is definitely one for you, Angela, which is about obviously, you are in the business of home buying, clearly one of the most high stakes transactions that most people will ever undertake. So you've got that trust risk to contend with, but also you in your job role are having to balance innovation and disruption. And this is a question from Julian Wells, none other than Julian himself is with us. Thanks, Julian. He's asking how we balance innovation and disruption with ensuring that the customer's best interests are being prioritized. And are regulators getting this balance right at the moment? Now, clearly, you have a balancing act to tread when you're thinking about your relationship with the regulators and indeed winning trust from them. Any thoughts on that?
Yeah, I mean, I think it's within the property area as well, there are many different regulators. So you're also not facing into one. We've got FCA, we've got all of the legal regulators, of which there are 3 active in that environment. And then we've got a number of unregulated areas, for example, estate agency and things like that. So there's a real mixed bag, which is very difficult when you're trying to navigate through that. And I think similar to what we've said already this morning, that regulators have struggled. I think FCA have made a real step forward in relation to understanding the issue and looking at how they can be actively involved in the various different projects that they have both finished and are setting off already. In relation to the legal regulators, we see a mix in relation to where they're up to, and there is in their world, it's that how do we balance the protection of the consumer against this level of disruption? And I think it's safe to say for all of us, particularly in the property industry, we've never seen this level of activity. So it is a matter of how we structure that in a way that maintains the trust, maintains the understanding across the board. So we're not just talking about consumers here, we're talking about all the various different stakeholders as well, including the regulators. And regulators can feel a little bit downstream because they don't want to take any action until they know that it really is going to happen, whatever that may be. But it feels a bit like a rising tide at the moment in our industry particularly, and we've all got to take it together, because at the end of the day, increasingly it's not about the individual brands, it's about the ecosystem as a whole. And a bad experience tends to be a bad experience, not necessarily from you individually, but from the general journey you've been on. So it's how do we bring everyone together with us? And that's been incredibly challenging. I think in property, we're seeing this year all of these different initiatives and all of these different trade associations and groups starting to really recognize the synergies and the need of real collaboration, which is fantastic. And that's when we can build in that layer of trust, and we can build in that governance, and we can bring the regulators with us and give them the confidence as well. But it is, you do have to have that patience to do that. And I think there's a temptation to run in and let's do something different, and that's going to be great. And but ultimately it's going to fail if you don't bring all of those people, or the majority of them, with you, and they understand how that connects into the various different aspects and how we're going to reduce the likes of duplication and that lack of visibility and that challenge around communication and all of that stuff that comes from trying to change one thing too quickly without bringing everything else in line. So yeah, it's challenging, and it can be incredibly frustrating, I think, at times. But when you see it start to come together, and that connectivity that you can offer and how that's going to translate to the consumer experience, it's a win-win for everybody who is willing to move at the right pace of the rest of the industry. But it's not an easy fix. It never will be. Trust isn't an easy fix, because you gain it. You can't just say you need to trust me. You've got to show that by your actions, and that can only happen over time.
And also, as you've suggested, it becomes an ecosystem consideration rather than resting at the feet of any one entity.
Absolutely.
Which brings its own complexity into the process. Thanks, Angela. I mean, that's a very interesting point, and I suppose it's related to, but separate from, another question that's just come in, and I did promise that there would be at least one founder-facing question, and one of the attendees has anonymously slung in a question to you, Ez, about founder responsibility. This is an interesting one, because the question goes, do you think fintech founders fully understand their responsibilities from the start, or do they underestimate or think that too much can be delegated to other team members? That's interesting, because it plays back to that previous point about at whose feet does this responsibility lie?
Yeah, I'm going to say straight up, no, I don't think they do, to be perfectly honest. I think you get some who do, right? Especially if they've come from regulatory backgrounds or regulatory roles. But a lot of founders come into it with the idea that they're going to be this crazy Elon Musk style disruptor, right? And that's what they're going to do. And the other aspect is you definitely see a lot don't recognize that you can abdicate or delegate responsibility, but you can't delegate accountability, right? And they don't really get the difference between the two things. Well, look, I gave it to him, I didn't know this was going on, I told them what to do, they did it. Doesn't matter, you're still responsible. You have fiduciary and regulatory responsibilities as the CEO, as an exec for that business, right? And recognizing that can be quite challenging. Now, in most regulatory businesses, you have to go through some kind of regulatory training regime if you're going to be an approved person. And so there is an element of upskilling that happens over time. And I often say most founders don't start off as CEOs, right? There is a founder to CEO journey. They give themselves the title, but the actual role of a CEO is something that they have to learn over time and grow into. And some don't. Some are unable to, right? And that's just part of the journey. There's a maturity life cycle for all companies where, to be perfectly frank, not everyone is able to stay on that entire ride, right? That's just how it is. And I think if we got more, I think we need to be more accepting of that fact. I think sometimes it's good that you get a founder who steps into a business space that they're not fully familiar with and brings an element of innovation to that and thinking that most execs in that space would just ignore, right? I mean, if we look at the Elon Musk example, and I'm not an Elon Musk fanboy, I'm just going to stress this, but let's recognize he has done some extraordinary things. You know, it's very clear when he launched SpaceX, the idea of reusable rockets, everyone said you're insane, it's never going to work. All the top engineers said it's pointless, don't do it. Fundamentally, because everyone else is coming from a cost perspective, saying you cannot spend the money on this, no one's going to do it. And you went, well, let's keep giving it a shot. We'll keep pumping money into it until we get it right. And he did, and he's proven everybody wrong, right? But an established CEO would never have done that, right, in that sector. So I think there's value in it, but to your point, I think there is definitely an issue where a lot of founders do not understand or appreciate the full weight of the responsibilities they're taking on when they're in those roles. And that's where it's really important they get good advisors around them to provide that guidance. And I would say if there's one thing I do see, it's that a lot of founders are hesitant to get good advisors around them, right? Whether that's, and to reward them for that, whether that's through equity, whether it's through paying them to do that work, and they decide to go it alone. And that's really dangerous. On the flip, I see that they get advisors who don't know what they're doing either, right? You know, the dentist from your local church, you know, he's my investor and my advisor. Great, he had some spare cash. Doesn't mean he knows anything about running a regulated business, right? And trying to get that balance right is really important. But I also think it's beholden on our investors who put money into these businesses to have a look at the founders and go, okay, you're a great founder. Here's a growth area where I need to see you improve over time, right? And we don't see enough of that, I think, because ultimately the people with the money have the power and the control, and they have an opportunity, a moment when they invest in those businesses to help shape how those companies grow. And a lot of the time they don't do it.
Thanks, Ez. And that's interesting that you've raised the point about where the power and the control are. And of course, yes, money is power, which I suppose leads to the size question. And one of our attendees has made the point that trust doesn't automatically come with being bigger. So their question is, what can and should be done to help bridge the gap between the smaller and newer fintechs who want to get into the, I suppose, the established banks, or perhaps to become an established bank, rather than just sort of us all helping the big ones to keep getting bigger? Any thoughts on that from the panel?
I mean, I'm happy to jump in. I appreciate I was just speaking. So this is a well-established problem, right? There was one time when Tech Nation was still running, they got all the banks to come together to do their FinTech pledge, which was all about how do we get the banks to work more with early stage companies. You know, they put up a lovely page on their websites, which was, this is how you engage with us, this is how you onboard, this is how you partner. But it is really difficult for the big businesses, the big bank, to work with a small company. You're a bank with millions of customers, and you want to bring on board a small fintech that's super innovative, really interesting, has never worked with more than 30 customers in its life, right? Doesn't have the income to back it. And now how do you parcel out a percentage of your user base to work with that company or work through that company? How do you onboard them? And then they've got certain challenges as well. The other option is that you do what we saw with many of the big banks, is you set up your own venture arms, innovation labs, and you try and bring them in that way and work through them. There aren't that many success stories from that route, though. tends to more be an example of either investment or acquisition over time. So there's still a huge gap between how many small businesses are able to work with the large companies. Increasingly, what you see is they get to a certain level of scale once they've received a certain amount of investment success, and then they either collaborate or they just absolutely take them on. Look at Revolut, right, as a classic example. But that is a great example of survivor's bias as well, right? Not the Revolut journey won't work for every startup. In fact, it's probably only worked for Revolut. I think there's a reason why I can see many other businesses quite like that come out of the UK. So look, I'm afraid I don't really have much of an answer other than this is a well-known problem. There are different approaches to it. I haven't actually seen a decent solution to this yet. I would love to see government take a more active role in in adjusting procurement rules to enable smaller businesses to work with governments as a major supplier, or sorry, was it client in the financial services sector. But yeah, I wish I had a better answer to that question, and hopefully that stimulated some thoughts from the rest of the panel. But yeah, I'll leave it there.
Well, it's a thorny question, and yes, do the panelists have anything to add on that particular question, or shall we move on to another one that's no less thorny?
I think what I would say is we're seeing more opportunities to be involved in pilots and active environments where you can get in front of bigger lenders more easily, because there is a real wish to move forward in relation to how things interact. Particularly, I mean, we're seeing this very much in the property world in relation to various different pilots that are happening at the moment. So there is glints of opportunity to be able to apply to be part of those pilots that gives you the chance to showcase what it is you can actually deliver. But I think it's very low level at the moment, but it's something. And I would really encourage people to get involved in those, because I think there is this view that perhaps it doesn't hold any value, but actually the reports that are coming out of that, and the government, the departments and the regulators and the lenders that are more and more looking into this and leaning into it, we're all taking more notice of that. So it's a start. It's not the perfect answer, but it's something that you can look at as well.
Well, one thing I will say, because I've seen so many small companies fall into this trap, is understand the procurement cycles of the bigger businesses, right? If you're looking at a Barclays or a Lloyds or a NatWest to sign up and use your product, and let's say it's 100, 200K a year to use it, that's going to be 12 to 18 months before they make a decision, right? Based upon where they are in their budgeting cycle and the rest. Now, if you're pinning all your hopes on that deal, you'll run out of money before you can get a no, right? Let alone sign them up. So what I would stress to smaller businesses is work on the lower tier companies first, build an engine of revenue for your business so that you can grow whilst cultivating and having those conversations, participating in those pilots that Angela talked about, and those other types of programs over time, because you have very different speeds at which these different businesses operate at. Don't get me wrong, we hear about big banks investing in XYZ, and it's a lovely success story. But again, these are exceptions to the norm. So don't get too focused on the big story that you read in TechCrunch about blah, blah, blah. Honestly, I look at my LinkedIn and I go, oh my God, I am not doing enough. Right? I am not successful. This is terrible. And that FOMO is a real danger, right? You've got to focus on just building a stable core business and then starting to think about these larger tier clients, because you're just not ready for them.
Thanks, Ez. I've got a question here, which is PR and external comms related. And this is something, as I sort of hinted 20 minutes ago, this is the question I get asked all the time. And it's a difficult one because when we're talking about some crisis scenario that threatens to fundamentally undermine trust, usually the work we do, the work my team and I do, that we're really proud of, is cloaked by NDAs. We do it every day in real life, but the clients we do it for and the successes that we generate, we are not allowed to talk about. But I can, and I have, I often do talk about the principles. And there are three key principles. So the question is, what do you do when it kicks off? What do you do when you're in the midst of the fire? And my three pieces of advice are anticipate, mitigate, and compensate. And very simply, from an external comm strategy point of view, anticipate, well, usually you can anticipate that something is going to snowball before it does. But even if the first thing you're hearing about it is when you get a phone call from a BBC producer saying we're doing a panorama on Monday about this thing that's happened, you can still get ahead of the story. You can still get ahead of the narrative, get your spokespersons in a row, get your talking points down, suss out what you can and can't say. And then the mitigate part is communicating clearly and consistently what you're actually doing about it. You have to reassure people, because the risk is that you could be put out of business if you don't. So you have no choice. So it's about making a list of what you're doing and sticking to that like a script. And the thing to remember in the mitigate phase is the media, your detractors, they're going to be looking for a story. They're going to want a sensational headline. They're going to want a scapegoat. They're going to want to know who's to blame. They're going to be looking for things that you absolutely don't want to talk about. What you want to talk about, what you have to talk about, is the best interests of the people affected. So where their line of inquiry and your line of communications differ, you have to stick to yours. And then the compensate phase, this is no less critical. Sometimes people make the mistake when they're thinking about PR strategy of thinking, oh God, it's gone away now, thank God, back to business as usual. Hell no. You need to have a long tail strategy for how you are going to outbalance and sort of make sure that not only has the problem gone away, but that you use it to push on to a better situation. So first of all, obviously the principle is not to let a negative situation or a negative story define you. But more practically, how do you do that? Well, it's about not just talking about the sort of positive changes that you've made, the things that you've learned. It's about actually demonstrating it. So it's where communications bleeds into operational. So I hope that helps. That's just a little bit of an insight in the last few minutes about some practical advice from a comm strategy point of view. There is loads more that we talk about in terms of how to build a turnaround campaign structure. And I do have some notes here, which I will not bore you with, but all about sort of the key principles of separating the organization from the individual, drawing an immovable line between the then and the now, how to shift your perception from being controversial to being the troubleshooter that fixed everything. But I don't want that necessarily to be the conclusive point, because I think obviously, we did convene this session very much through a PR and comms lens, and how do we manage our reputation externally? But I think rather than it be left to me to make the conclusive point, I would like in the last few minutes just to hand over to each of the panelists and ask them to just share with us your final sort of closing thoughts on the issues and what you think your one piece of advice would be around managing and maintaining and preserving trust. It's a quick fire round, a little bit on the spot, but
I'll go quickly then. From a product perspective, trust comes from clarity, consistency, and not leaving people stuck. So if users understand what's happening, can move things forward, trust usually follows.
Thanks, Alex. Love it.
I'll go next, and then I'll go over to Ez. I mean, for me, it's being able to introduce that certainty. That certainty and trust go hand in hand, and if you can deliver that, then people will go with you. But you've also, if things go wrong, honesty and integrity, and being, looking at the best way forward at the end of the day, and being really honest with how your consumers or your customers are feeling at that point in time, and what do you need to do to rebuild that. So that for me is important.
Thanks, Angela. Final minute, Ez, all yours.
Yeah, so I think things go wrong, you start losing trust really when people start having to firefight and they're flying blind and making panicked last minute decisions, and it just it all goes to hell, right? I think most important thing, start with having a clear strategy and a plan and get ahead of these things. Make sure you're engaging with the regulator, you're engaging with your investors, you're engaging with your clients, and you're doing that on your time frame, not theirs, and not some random intervention that has forced you into that position.
Thanks so much. Thanks very much to all the panelists. We're bang on time. This has been brilliant. Like I said, to me, the door is not closed at 12:30. I am delighted for anybody in the room to connect with me on LinkedIn, pick up the conversation, continue the conversation. We're going to circulate a bit of a write-up to those that joined us and to those that missed it. So as far as I'm concerned, this is only the beginning of this conversation. But for now, I'd like to hand back to our co-hosts, FinTech North, with my thanks to everybody.
Thank you so much, Oliver, and thank you to everyone for joining and to our panelists. That was a really interesting discussion. And as Oliver says, we will be producing a write-up and sharing the recording, which will be posted on our YouTube. If you'd like to watch it back, reshare, anything like that. Very quickly, these are the events we've got coming up for the rest of the year. So busy events calendar. It would be great to see you coming along to some of these. As Joe mentioned earlier on, we've got our 10th annual Leeds conference coming up, which is really exciting on the 24th of June. And then again, final thank you to everyone for joining and really looking forward to seeing you at the next one. Thanks.
Thanks, everyone. See you in Leeds.
Thank you all.